Hello. The company being analyzed today is Alldigi Tech Limited. This is a company which specializes in outsourcing solutions. Basically, companies can outsource some of their tasks to Alldigi Tech, and Alldigi Tech takes care of some of these tasks on behalf of these companies. For example, let's say we have a car manufacturing company and it needs to take care of course, paying its employees on time, take care of human resources, all right, take care of customer support. These are non-core activities, all right? And so these activities we can give to Alldigi Tech, and Alldigi Tech can manage these activities on behalf of that company. So that's what this company does, outsourcing solutions company. Today, we're going to analyze the company's financials, its cash flows, its balance sheet, how's it looking, its future outlook. And this is basically an intro to the business. So let's start. Market cap of 1433 crores, so small cap company. Price of one share is around 940 rupees. The book value per share, book value is assets minus liabilities. So the book value per share is 140 rupees. So current price is way more than book value. The price to earnings ratio is 21.6. ROCE, return on capital employed, is 31.4%. ROE, return on equity, is 27.3%. Very high numbers, both ROE and ROCE. All right. And a dividend yield, this website is showing, is 3.19%. They do pay out a lot of dividends. If this is true, pretty good yield, I would say, pretty good yield. So let's take a look at its financials. Okay. Now, the company has two phases. Okay. The blue lines you see are the company's sales, quarterly sales. The green lines The green lines are the net profit margins. The yellow lines are the OPM, operating profit margins. And as I said earlier, sorry, the blue blocks, these rectangular things, these blocks are the quarterly sales. So it's two stories. The company has two stories. Is that before this time, okay, this September 2020, this 2020-ish era, the company was in a pretty precarious situation. Sales were up, in 2017, 2018, but then went down. Profits were kind of fluctuating. But then from like this region onwards, September 2019, here we see some kind of stabilization. And then we see revenues increasing steadily. Profits, though we can see they are fluctuating, especially net profit margin, the OPM, the operating profit margin, seems to be pretty stable. As compared to before, they seem to be higher and pretty stable. Around this time, this January 2019, the promoters changed hands. Okay, Quest Corp, India's largest workforce management company, acquired a stake in this company. And now the company is a subsidiary of Digitide Solutions, which used to be a part of Quest Corp. So around from 2019 onwards, we have seen consistent revenue growth and profit growth. 2019, 2020-ish, that time onwards, things are stabilized and are growing. All right. So when we're talking about this company, what is the scale of this company? All right. Now, because earlier sales were declining and all that, we will only take a look at the financials of a few recent years. Now, 2025, okay, all these numbers are in crores. You see this 546, this is the total sales, 546 crores of sales. This is 130, 130 is the operating profit. So 130 crores of operating profit. You can compare this to last year's 14 crores plus rise in operating profit compared to last time. Operating profit margin is 24%. Very nice. This is 28. This 28 is other income. And out of this 28, this year, 18 crores out of this 28 crores were due to an exceptional item, a one-time gain. So it's very important to exclude this 18 crores, okay? And 110 crores is the profit before tax. So if you minus 110 crores with 18 crores, we get 92 crores. So this figure should really be 92 crores. And after applying 0.25% tax, the profit should only be 69 crores. Profit after tax. Currently it's 83 crores. It should really be 69 crores. Because again, this 28, okay, 18 crores out of this 28 crores were an exceptional one-time item. So exceptions need to be excluded. All right. Here we have the compounded sales growth. Last 10 years, despite the fluctuations before 2020, we still see a compounded sales growth of 14%. Last 5 years, 13%, and last 3 years, 20%. TTM, which is trailing 12 months, last 12 months, sales growth is still 14%. Profit growth has been 21% over the last 10 years. Last 5 years has been 10%. Last 3 years has been 27%. Trailing 12 months, last 12 months, 0% profit growth. Maybe they're including, maybe they're excluding the one-time gain. But even though we see in these numbers, right, pretty, from 35 at least, 35 all the way to 83, there is a substantial increase. This 83 should be 69, but still, still okay. So decent revenue growth, we see decent revenue growth, and we have seen decent profit growth, but profit growth has usually outpaced revenue growth. Interesting. When we take a look at return on equity over the last many years, 23% 10 years ago, 21% 5 years ago, last 3 years, 25%, last year, 27%, could be due to the exceptional one-time item, but even excluding that, we see pretty consistent or rising return on equity, pretty high return on equity. Last thing to take a look at are cash flows. Okay, cash flows from operating activities. We will take a look at this. Okay, pay attention to the top line. Last few years. Okay, so from 2021, okay, 70 crores operating cash flows dip to 64, and then onwards we have seen a really very nice growth of 118 crores in operating cash flows. All right, this 118 crores does not include, as far as I know, it does not include that exceptional one-time gain of 18 crores. So still, cash flows are improving. It seems that, so that's a good thing. Now let's take a look what the company actually does. Now, when we're talking about what the company does, boom, we have two segments, which they have renamed, of course, they recently renamed it. So they had this customer experience management. All right. Basically, when they handled tasks on behalf of other companies, and these tasks are for customer management, customer support, talking to customers, all that, developing chatbots for the company's websites to engage with customers. So, customer experience management, they had this segment. This segment is now known as business process management. So, all the financials we're going to take a look at, named business process management or BPM. They're actually used to be named customer experience. Then the second segment was employee experience management. Employee experience, like human resources, making sure employees get paid on time, tracking their attendance of employees, all that stuff. Okay, making sure your employees are productive, everything like that. It comes under the employee experience management, all these services. This segment now has been renamed tech and digital. So, tech and digital used to be employee experience, and business process management used to be customer experience. All right, all right. So now let's take a look at what the company actually does. First, 25 years of global business process outsourcing services. Okay, 25 years, 600 clients, including many Fortune 100 companies. So 600 plus clients. Now, tech and digital. This used to be the employee experience management. 18 million employee records processed per annum. They have stated clear market leadership, at least in this, like employee experience management thing they do. Now, how do you take account of this 18 million? What do we understand by this? This number is basically, it shows us how many employees, how many employees this company actually covers with its services. That is, services it provides to its clients, how many employees are actually covered. So, more are the number of employees, more the clients, more people its services are going towards or servicing more and more people. So, 18 million employee records. Its services reach on to 18 million employees, okay, per annum. This was a tech and digital. Then Under BPM, they say they have 2 decades of delivering global solutions. And digital RPA, RPA is robotic process automation and all that. Under BPM, they said they're a value adding global BPM player. So they're global. They're engaged in many companies, in many countries around the world, from the US to Philippines and all that. And tech and digital in the HRO services, human resource services, they say they're a market leader. All right. I don't believe you. I don't know if I should believe you. But okay, their words, they're a market leader in human resource HRO services. Now, global delivery capabilities, they service 69 countries, okay? They have subsidiaries in US and Manila. Now, FTEs, this number FTE, this term FTE means full-time equivalent, but for sake of simplicity, we will consider this as the employee count, all right? They currently have 6,300 employees overall. Around 4,500 of them are in India and 1,800 of them are in Manila, Philippines. All right. This 6,300 used to be 5,600. So there has been an increase in number of employees working also. All right. So they are engaged. They have many of the employees in Manila, Philippines also. Then moving on, we have leading and growing provider of E2E, enterprise to enterprise tech and digital services. An overview of what it provides under employee experience management. So, uh, employee postings, where they're posted, employee exits, onboarding of employees, hiring more people, employee info store, getting information on employees, leave and attendance, tracking the leave and attendance of employees. Okay, okay, making sure employees are paid on time. Again, they're a global company. They're dealing with many countries, and many other countries have different tax structures, different tax brackets and all that, different ways they're taxed. So making sure all the employees working in different countries, they're getting paid on time and they're complying with the tax rules and all that. All right. Then retirees, okay. PF, pension fund trust accounting. So providing some accounting services for their pension funds, loans, investments, tracking them. All right. Reimbursement system. Employees are traveling. So giving alerts to travel desk, okay, travel claims, vouching, settlements, and all that. So all these kind of services. Here it says, right? Smart Stat, tackling complex payroll compliances, different complex rules of different countries backed by technology. Okay, managing and delivering powerful and accurate payroll. Make sure employees are paid on. And the thing is, almost all companies, all types of companies have employees. So of course, potentially Alldigi Tech can service so many different types of industries and companies because we all need money on time. All right. Then BPM, business process management. This was the customer support, okay, customer experience management. Here they provide chatbots. RPA is robotic process automation. Basically, some tasks which were performed manually earlier but are very repeatable. They can be automated through use of robots. Okay, chatbots, helping in customer acquisition, customer and tech support. Okay, insurance companies, they even provide service to insurance companies like processing claims. All the stuff that goes on in insurance, which can be automated, they can do that. Alldigi can do that. Transaction processing, right? Seller support purposes, services, back office services, credit adjudication. Basically, even in the office, there'll be things that can be automated. It can help with that also. Then compliance, accounts receivable, accounts payable, accounting research. We have healthcare. It can even help in healthcare companies, helping in debt collection, okay, helping in fraud detection and risk management. It can provide services or software. It can help in fraud detection. So wide variety of users, a wide variety of industries it can work in, which reminds me, I need to show this. All right. I need to show this. This is the company's website. If you go to right, if you go to this industries, I need to see if I'm visible. Hold up. Wait, what? Yeah, yeah. Let me see I'm visible. Yeah. Yeah. So, yeah. So under the industries, you see fast growing tech, banking, fintech, healthcare, insurance, automotive and manufacturing, retail, consulting, fast moving consumer goods, telecom, media, and entertainment. So we are talking about a vast number of industries it can help in because, of course, every company or many companies have employees and customer support and all that. They need all these services. So Alldigi seems to have a wide market. At least it has a wide market. We can say that, or I hope I can say that. So moving forward, we have. I'm looking at my notes. We move to page 18. Okay, page 18. Here, okay, business. Okay, BPM. All right, BPM. We will look at the sales and all that and where they're coming from. So in sales and all that and the margins, we see 412 crores worth of sales in fiscal year 2025 came from one place. Okay. It came from where? It came from BPM. And if you remember the yearly sales of 500 something crores, you can see majority of the money revenues are actually coming from this segment, from business process management or the customer. Okay. The customer experience management, like customer engagement, customer support, chatbots, all that stuff. That is providing the majority of revenue. And here you can see of 412 crores in fiscal year 2025, 300 crores came from international. Sorry, yeah. 300 crores came from international. So out of the 540 something crores of revenue in fiscal year 2025, 300 crores were from business process management international division. So for BPM, majority of revenue comes from international. Okay. And for the last 3 years, it has seen a compounded growth rate of 21.7%. All right. So a lot of revenue coming from international. And if you talk about this is the I believe this is the EBITDA. No, this is the hold up. What is this? I think this is the net profit margin. This is the net profit margin. 53.3 crores came from BPM alone. All right. 23.8% growth CAGR. Nice. Here we have the margins also 12.9%. This is the, I think, the net profit margin. So we're talking about a company, Alldigi Tech, okay? Majority of its revenue comes from business process management, basically customer support and all those tasks, okay? 12.9% are the net profit margins for this business, and 300 crores, the majority of the business is international. All right. Then we come to tech and digital. Tech and digital. Here, only 134 crores of revenue in fiscal 2025, a growth of 14.9% over the last 3 years. And majority of revenue here comes from domestic. 92.1 crores out of 134 crores came from domestic. If we see the net profit margins, all right, these are operating profits. Okay, these are EBITDA. Completely my fault. Okay, this is, I believe this is EBITDA. Is it EBITDA? Yeah, couldn't be net profit. Yeah, this is um hold up. This is EBITDA. My completely my fault. So this segment, okay, has lower revenue. We have seen lower revenue growth from the employee experience management, but incredible operating profit margins of 38.6%. Here we saw 12 point something percent. Here we see 38 point something percent. Okay, 38% worth of operating profit margins, operating profit of 51.7 crores. So amount of operating profit, we are getting the same. Tech and digital is the more margin adding, more profitable segment, but majority of revenue comes from the customer support one, the customer experience management. All right, all right. Now here we see the employee records. Employee records. I think we saw that. Tech and digital full-time equivalent employees seems to be increasing. Here we see the business process management. Ooh, wow. So out of this business process management, okay, 5,158 workers were working in quarter one fiscal 2026. 2,600 were working Domestic 2,500 are working internationally. Okay, the company has a significant international presence. All right. Then we take a look at the balance sheet highlights. Okay, the balance sheet. Here we have the balance sheet. Under balance sheet, I think we need to take a look at only one particular thing actually. Uh, oh my God, this balance sheet sucks. All right. Um, Here we should take a look at only current assets and current liabilities. Here we have current assets. Okay, current assets. Pay a close attention at the date. This is March 2023. You need to take a look at the latest one. So current assets, the total numbers are given here. 234. We will compare this to current liabilities. So current assets seem to be as of June 30th, 2026, fiscal year 2026. Okay, June or 2025 or fiscal 2026, 306.6. What are these numbers in though? Crores. So 306.6, 306 crores worth of current assets. Okay. If you take a look at cash and cash equivalents only, this company has 50 crores worth of cash and cash equivalents as of latest. 50 crores worth of cash, 55 crores worth of cash and cash equivalents of a company worth 1400 in market cap. So around 3 point something percent of market cap is in cash. This was the current assets. Let's take a look at the current liabilities. These are the total current liabilities here. 71 it's shown. Let's take a look at the latest. All right. 106.1 crores in current liabilities they're showing. So 106 crores worth of current liabilities, current assets are 306.6 crores. So current assets seem to be way more than current liabilities. Cash and cash equivalents are more than half or around half of total current liabilities. So balance sheet wise, the company seems to be pretty healthy. So this was the balance sheet. We have already looked at these segments where it's getting its money from. And finally, I think we should go to the annual report. Yes, we are now going to go to the annual report of the company. All right. Here, under management discussion and analysis, this is page 18 of the annual report. All right. Few things I've underlined. Here they've said in CXM, customer experience management. Okay. In CXM, focus remains firmly on the North American market. Okay. North American market seems to be the focus. Yeah. North American market. Let's just read the entire thing. I think this will be more smooth. So this is under CSM. In customer experience management, our focus remains firmly on the North American market, where we have continued to expand and deepen client engagements. During the year, fiscal year 2025, we achieved an additional 93 crores in revenue growth, driven not only by new sales, but also by new strategic account farming, strong operational performance, ramp ups, ramp ups, new lines of business additions, and new logo acquisitions. New logo acquisitions, new clients are being added, new lines of businesses, new products are being added. That is good. They're adding more clients and they're introducing more and more products. All right. Then we read this. The EXM, Employee Experience Management, business continues to expand across both domestic and international markets. Okay. Alldigi offers payroll and human capital management HCM solutions in 42 countries globally. All right. In fiscal 2025, they won 63 new logos, 63 new clients with a total average contract value of 30 crores. Okay, 30 crores is average contract value. Multiply with this by 63. You know the math. Average contract value saw a growth of 50% year on year. These deals enabled us to enter 27 additional countries. This is for fiscal year 2025 alone. They're entering new markets. Okay, they're acquiring more clients. They're introducing more products. Okay, including regions in the EU, and previously untapped areas of APAC. APAC is what? I forgot what APAC actually means. Um, okay. We also secured our first wins in the PSU government sector in both India and the Philippines. In addition, we added 23 new partners, including sales, service, and platform partners. So only for fiscal 2025, we're not discussing the other years. It seems that only for fiscal 2025, the company entered new markets, all right, especially in the employee experience management business. They entered new markets, all right. They won way more logos or new clients. They added new lines of businesses and saw average contract value grow. Nice, nice, nice. Entering more markets, and especially they just entered, they secured their first wins in the PSU government sector for both India and Philippines. Okay, all right, all right. Moving on, we move to page 20. Page 20. Here they've said, let me just let me just make sure this is visible. Is it visible now? All right. Pretty blurry, but still visible. The CSM customer experience management international business has sustained its growth trajectory in fiscal 2025. Now, headwinds in the BFSI segment, okay, but the healthcare vertical established in quarter four fiscal year 2023 has maintained robust growth for fiscal year 2025. So the healthcare vertical servicing healthcare companies was established in only quarter four fiscal 2023. So we can consider this as a new line of business and still sustaining growth in 2025. So I'm trying to see if the company is making mentions of new lines of businesses and what the contributions are. So this seems to be pretty successful. All right. Then in fiscal year 2025, okay, they saw the successful launch of a new line of business with a prominent China-based e-commerce company delivering harmonized system coding services. All right, I don't know what harmonized system coding services means, but at least in fiscal 2025, it seems they entered into the PSU government sector in India, Philippines, and the successful launch of new line of business. A new product achieved success with a prominent Chinese-based e-commerce company. And down below, they have said that healthcare remains a cornerstone of our growth strategy. All right, healthcare remains a cornerstone of the growth strategy. Pretty good. Then talking about threat from newer technologies and AI. Now, I think they have said two things here. One, they are completed the upgrade of both our platforms, SmartPay 4 and HRMS. SmartPay is payroll processing, HRMS human resource management systems. I think this is a big paragraph. What they're trying to say is that the threats of new technologies and AI, one they're saying, right, is that some of the business, okay, a lot of their business for like sales, managing sales and customer support, it involves a lot of people actually manually working. So they feel that there's less of a threat coming from AI and all that because they need that human connection. The company still feels that many of the services still need that human component. And they feel that this new tech, this AI, they will use this to decrease the cost. So the report is optimistic. They say they're upgrading the platform. Okay, they're upgrading whatever platforms they had, their services. They're upgrading the services so that they're still competitive. They think that the technologies they can use to decrease the cost and that they're part of the services, right? Like here, they have said a larger component of outbound sales processes continue to need significant human interface. Okay, continue to need significant human interface. So, regarding artificial intelligence, this was one of their small statements that they made. So, all right, leveraging new technologies to reduce the cost. Okay, all right. And this is good. This is good. Smart Pay 4 and HRMS. the Buzzly platform, they're actually upgrading it, making it more relevant and competitive, which is nice. Which is nice. They're making investments into all this, they're making sure that all their clients are actually moving to this new platform. They mentioned this before. I remember that. Maybe I remember that. Maybe I'm. But okay, one last thing to discuss here. All right, one last thing. Page 30 of their annual report is this. Current ratio. All right, current ratio, current assets divided by current liabilities. You already saw this 2.7 times. Pretty good. More than one is nice. Return on equity 32.7%, return on capital employed 29.4% for fiscal 2025. Again, I don't know if they're including that exceptional 18 crore gain. You know, debt to equity, debt as a percentage of equity is only 0.2. Really nice. Okay. Operating EBITDA to OCF, operating cash flow 91%. Nice. I think this is all. This is all. I think not. I think I can't say anything more. Bill receivable DSO. DSO are days sales outstanding. This is billed and unbilled receivable. I believe this is basically how much time the company takes to collect money from its customers. So the receivables that have been billed, it takes 53 days to convert this into revenue or to get the money back from the customers. Unbilled receivables, it takes 28 days. All right. Pretty small actually. So that was it. That was all Tech. Let's not ramble more. I have nothing more to say. So overall, we saw that the balance sheet was pretty good. Current assets are way more than current liabilities. The company is able to service a wide range of industries from banking, okay, to healthcare, to fintech, even insurance companies, right? Even insurance companies, because insurance companies, like the claims processing, underwriting, and all, a lot of tasks can be automated. Even like they said, like car manufacturing, automotive companies, they can service all those. It seems they're introducing new lines of businesses. They offer a diverse range of, let's say, services. Their cash flows, very importantly, their free cash flow and their operating cash flows have shown significant growth in the past few years. So I can't give any financial advice. I own exactly one share of this company, so I'm biased in that regard. So overall, that was the company. Do state your views. Do state what are the future outlook looking at. From what I can understand, the company is very international. Okay, we saw that it's very international. It's expanding into more and more markets, and it can deepen its relationships into more and more markets. And yeah, its future growth, it seems that because it's able to service such a wide amount of companies, wide amount of industries, right? Maybe its future growth will be solid, but again, that's a future that's uncertain. It has shown some great, like 20% plus operating profit margins overall. And yeah, that's it. That was Alldigi Tech Limited, a small cap company. Let's see what the future holds out for them. Bye.